Hello, I'm Bernard Hickey with the daily briefing from interest.co.nz. Today, the big news is that New Zealand inflation spiked higher in the December quarter and was much higher than expected. We'll look at the implications for the economy and, most importantly, the implications for interest rates. Firstly, news that inflation in the December quarter was higher than economists and the Reserve Bank had expected. This is bad news for interest rates and puts pressure on the Reserve Bank to raise the official cash rate when it announces its latest rates decision next Thursday. Economists surveyed by interest.co.nz had forecast the consumer price index would rise 1% in the December quarter, giving a consensus forecast of 3% for annual inflation. Statistics New Zealand said higher fuel, food and housing costs were the major factor lifting CPI inflation to 1.2% and annual inflation to 3.2%. So 1.2 versus forecasts of 1. This is up from quarterly inflation of 0.5% in the September quarter, so a real spike. The most significant upward contributions came from the transport sector, it's up 3.2%, food up 1.5%, and housing and household utilities up 0.9%. This means inflation is now above the 1 to 3% band targeted by the Reserve Bank on average over the medium term. Economists said earlier this week that the Reserve Bank had little room for an inflationary surprise in the CPI data today, and they got that surprise. The pressure will now be on Reserve Bank Governor Alan Bollard to explain next Thursday why he shouldn't increase the OCR by another 25 basis points to 8.25%.